Tuesday, June 24th, market analysis. Stan Ehrlich, good morning. Almost 10 o'clock California time. I start out with stock indexes, and I go to futures, and I've got a few stocks. And occasionally I talk about a variety of other things, cyclicality, for example, and psychology of trading, so whatever. We have a strong market today. Stock indexes are in and staying in at the moment. Slight new highs. Well, not necessarily slight. These are new highs since 3 or 4 months ago, since basically February. If we close above the highs made in the last couple of weeks, that would normally be bullish. But the market is acting a little unusual because the climb this morning involves a couple of features that are not necessarily bullish. And with the E-mini, and I'll go back, we don't have any gaps with the 24-hour markets or 23-hour markets, the futures. But in the QQQ and the SPY, we do have some big gaps. Let's look at those in just a minute. Here we have new high, but not by a lot so far, but it's staying there. If we close back below the high made on June 11th, that is not particularly bullish price action, even though it would be up a significant amount on the day. I still think these markets are trying to top out. I have to say that. And I believe that we have a potential triple divergence. RSI is not overbought and is not making higher highs, while the price action is for the last couple of months plus. Let's look at the 1-minute chart. So it's climbed its way up relatively steadily this morning. But again, I am just concerned about the overbought or almost overbought condition and a major November, December, January, February trading range resistance levels that we are at very accurately in some cases this morning. Now, the SPY did gap up, and gaps are almost always closed. So we'll see how that gap, this morning's gap, is handled in the next few days or weeks. But it is a new high, and it looks like a new high close since middle February. But we do have this last significant resistance area where the previous 3 important highs, December, January, February, are. And we've got the gap to close below the market. And we've got divergences building as well. A variety of reasons to be very cautious up here and do not necessarily get carried away on a bullish situation or expectation. I just have trouble with the way this thing is acting. I can't put my finger on it necessarily. So we're near high and last on the rally with a little bit of delay in the data for the SPY. The QQQ also has a new gap and a very accurate test of previous important tops. Way back on December 16th, 24, and February, that is, 19th of 25, we were at these price levels that we have reached basically on this rally today. Gap up, maybe an upside exhaustion gap. Major historical resistance, absolutely. Closing above those highs in December, February, that could be very bullish, but I would need some upside follow through, and typically you're going to have a little downside correction and then go up some more. So I am just plain skeptical at the moment. I have to say it. I'm sorry. So let's see about the big up gap in the QQQ this morning and close to high and last and still climbing. NASDAQ, close to the same situation, new high since February, no gap because of the 23-hour futures contracts, and right up against almost, not quite yet, the historical resistance, those highs again in December and February. So we're in this area where it's topped out before. That's what really concerns me. And intermediate to longer term, you seem to have been losing upside momentum, despite the fact today's a very strong day and yesterday's sort of. NASDAQ futures trying to make a new high again. Wow. I'm just not real optimistic about this rally continuing at this point. Now, I can see it if it's going to get a little stronger, stay up there, dribble back a little, and then make new highs again. Then I'm going to be forced, of course, to go with the longer term, significantly bullish expectations, but not yet. The YM Dow right up against the highs that were made in March and May, and not quite making higher highs. So remember, this is a little bit different kind of market, along with the Russell. It's also not quite the same as the Spider and the NASDAQ. They're pretty close cousins, but not the YM and the Russell. So resistance and a lot of territory to cover above the market to make new highs for many, many, many months. New historical highs, in fact. Not there. And today's rally is looking pretty good in general, but I'm just skeptical about the situation. So here is the Russell coming up to resistance areas again where it stopped before, and that's the red zone, the high made a couple of weeks ago. Not overbought. I can't depend on a moment of overbought conditions in the indexes. They're not. That allows for a little more strength. So this is a very touchy situation. We're going to get some significant upside follow-through if you manage to stay strong, or this is going to turn down pretty significantly and pretty hard, and that is what I'm looking for. But it hasn't started, obviously. Russell, 1 minute chart, having a little trouble in the last rally, making higher highs, but no big deal so far about turning down. Let's go to the bonds and the notes. The bond market is almost a new high ground, almost a new high close, pushing its way through resistance slowly. Downside corrections are holding. New highs have been made. Having a little trouble now and then, but so far so good. The major situation here is we're basically between a hard spot and a rock. A lot of resistance around, excuse me, a little below 117, down to 15-ish, and some very good support at 110, 111. So, pardon me, and could stay in this trading range for a bit. Notes, same situation at resistance. Now it did make a slightly higher high, and it looks like it might stall out right where it is because it's at resistance, close to being overbought, maybe a little more pop up and then turn back down modestly. Nothing tremendous at the moment. Can't put a finger on a big move up or down momentarily. Now, crude. Yesterday had a gigantic bearish engulfing ER sell signal. I pointed it out in all three energy markets. Bearish engulfing on Friday and two of them yesterday on Monday. We're down sharply again today, exactly what I was expecting, hoping for, and I got. And it bounced off of so far the beginning of support. Great. We're not oversold yet. We could drop into the support area a little bit more. Wouldn't be surprised to see 61 and a quarter. So we're starting that little support range where it might turn up somewhat a little bit and then down again. Now, just because the bearish engulfing ER sell signal, the red bar on Monday, is huge, does not necessarily mean it's going to be a big, long-term important top, but that's possible. All I can say is these sell signals happen frequently at significant turning points. They did last a few days for a pretty good move, and that's already happened today from yesterday's reversal. Or it could last for weeks and months. I can't tell. All I've got is this trading system that seems to produce signals on profoundly important high or low days, and sometimes close to the tops or bottoms, but not necessarily the highest high or lowest low. and we will put that to rest for the moment. Teams. Now, what about the bearish engulfing on the natural gas? This is a little bit different story. I believe we have a shoulder high on November 22nd of 24. It is almost exactly the same number of days from the highest high to the last shoulder high, which was also a bearish ER sell signal just Friday for natural gas. Both shoulders are red bearish engulfing signals. So far, of course, the first one worked for a couple of weeks and did pretty good. The second one is just only 2 days old and dropped a lot on Monday and is dropping more today. But here's the key. We're approaching a neckline on a head and shoulder top formation that has a downside objective of approximately 1.00. If we cross the neckline in the classical sharp, big down, maybe gapping down kind of day in the next couple of days, we should be off and running down to 1. Now, that's a pretty bold statement considering you're at 3.5 at the moment. Pretty big percentage change, to say the least. But all the body parts are here. The timing is right. The pattern is complicated, but it's there. I don't know if it's going to work or not, but you don't ignore these kinds of things, and I'm certainly predicting a breakout and a big move down. So let's keep a close eye on this, and the next day or two could break out at any moment, today even. Next, we have another huge bearish engulfing in the other energy, heating oil, yesterday. Another big down day today, and already starting to break support levels, not holding very well. I think it could easily come back down to below 2, maybe 1.8 in that ballpark area, and relatively quickly. Next is gold, minor new lows. Silver, gold, platinum seem to be getting caught between a rock and a hard spot. We got resistance that's stopping the rallies. We've got support that's holding the market. So I'm looking for more sideways movement for the moment. Pardon me, but I do favor the upside intermediate to longer term. But we'll see. Well, can't really cough. Now, overbought conditions in silver caused it to top out. Unfortunately, no sell signal, but we come back down in the support area, and I wouldn't be surprised to see it dribble off to 33.6 quickly and soon. In platinum, we also have overbought conditions. We have a divergence, new highs in price, but not in the indicator. We also have had an extremely overbought in the low to mid 90s overbought, which is very rare, condition with an ER sell signal that didn't particularly work well. There was a little profit elbow room for the scalp, not much, but new highs have failed to hold so far. Dip back down, and in the next few days, if we start closing below 1239.3, I expect it to break 1199 easily and come back down probably to about 1087. But it depends upon how it's acting in the next couple of days. I'm looking for bearish engulfings. I'm looking for sell signals. We could get still a red bearish engulfing sell signal in the next couple of days if it'll behave properly. So I'm watching for new sell signals in platinum. Copper up against a resistance area, stalling out as it has done many times before in the last couple of months. Same price range. Not quite overbought, though. But I do think the resistance is going to stop the rally, and it's going to turn back down again, maybe below 4.6, 4.5 area. What about the grain markets? Well, they were looking pretty good until the last couple of days. Resistance in soybeans stopped the rally, and we're already back down to some support almost, and that would be about 1030, 1029, 1028. But if that doesn't hold, Well, we're probably going to go all the way back to 996, and I'm not ruling out another move all the way down to the low 970s. What about soybean oil? We've got a bearish engulfing sell signal on Friday. It dropped like a rock yesterday. Great. And it's dropping a lot more today, closing part of a gap on the upside. So now this is a little bit safer to say upside exhaustion gap, overbought conditions, bearish engulfing on the top of the market, ER sell signal, and now coming down to close the gap, totally expecting 50.80. And I'm not at all ruling out 47.30 and maybe even lower than that. This is turned down. Bearish engulfings, ER sell signals, I don't ignore. They may not always work, but then our trailing stops probably locks in a small profit very, very quickly, if not keeping us from getting hurt too badly if the trade doesn't work and it produces a loss. Oversold condition in soybean meal. New lows for a long period of time. All the way back to, wow, August of 22. Don't see anything stopping this so far. Oversold conditions will, like right now, produce little rallies here and there in this longer-term bear trend. I got nothing major that causes me to believe soybean meal is about to go straight back up. Bouncing, yes, up to resistance, probably ballpark of 294. And then back down again if it can bounce up that much, which is very possible. But the trend is obviously down. Oversold conditions are not that severe yet, but getting close. 15 is pretty oversold. So I do expect a little bounce here at any time. If I get a bullish green engulfing ER buy signal, that would change the story, but it hasn't happened. So corn, new lows, not quite oversold, extremely close at 26.2. So it could drop off a little bit more to match the lows of August of last year. That's almost a whole year ago, 10 months or so. And then we would probably be oversold. And then we might get a little bounce, kind of like meal. But there's too much resistance above. Yeah, maybe a double bottom of size, but that remains to be seen. But, you want to watch for it maybe. But I have to be neutral to bearish on these grains. Nothing is breaking out. Nothing, no major bullish breakouts, except for the soybean oil. I'm sorry, I wanted to mention that again. This soybean oil gap closure, which is in progress, is also the only intermediate to longer term bullish picture in grain at this point, because we did make new highs since November of 23. And this could be construed as a complex head and shoulder bottom. But there was a false breakout back in on May 14th. Came down substantially. Normally doesn't happen. Probably going to damage the pattern. All of a sudden, we got a huge move on June 13th, and then I left for a week. And Monday of last week, it actually broke above important levels. Breakout. Upside breakaway gap, no less. So in oil, we are now coming back down, soybean oil, we're coming back down to support levels. Closing gap, and the soybean oil could hold, turn around, and start to trend higher again. The minimum upside objective on the pattern should be around 62.60 or more. So I really do like soybean oil, but everything else doesn't support it. Well, let's go back and look at wheat. Not doing well. Down sharply second day. Bumped against resistance Friday and Monday and turned down. No signals. Bear trend. Looking for a test of the lows of 522-ish, 523. And let's see what happens when we get down there. We might get oversold, bounce again. All right. We got Shell with a bearish engulfing yesterday and down today. Don't disregard these bearish engulfing ER sell signals and buy signals. We got the bottom of the market back on April 9th. Beauty, big move, 60 to 73 in a matter of a couple of months. These are two sell signals, one of which yesterday was the highest high for the rally, up almost against resistance, not quite. And I am looking for a move down at least to 68.55, as I said yesterday, and very possibly 67.06, and even a little lower than that. What about Apple? Right at that trend line right now. If you believe in the trend line stopping the rallies, this is your opportunity. If it closes stronger than where it is, by just a couple of bucks or more, you might be wrong. Breaking the trend line is not what you were expecting. If you're right, this is going to turn down from where it is right now, or very close to where it is right now, and start to slip at least to test support to 193.40. And if that breaks, then you're probably going to look at 170-ish. What about Tesla? Couldn't make a higher high from yesterday. RSI doesn't help us much. We have a little double bottom, but that's already worked. Minimum upside objective probably was already reached and fulfilled. Let me double check that real quick. You got right about there, and you click on that, and you got the depth of the formation, and you measure from the high breakout point, and oh yeah, I did this yesterday, as a matter of fact. The minimum upside objective was met almost exactly on a rally May 29th. Almost to the tick, it looks like. Super close. Okay. Neutral to friendly, but it looks like we're kind of getting stuck here a little bit. Carvana, up a little today. Did close a gap from a week and a half or so ago on the way down, so that's done. Not overbought. Might get up a little stronger, up to this resistance, previous highs. Maybe get overbought again, double top out. Carvana's looking okay. I would expect a little bit more strength. And again, the E-mini up there, holding. I don't see any weakness yet. Hanging in there, but cautious. You guys have a great day and profitable trading to you.